Hello, hello, hello. Hey guys, how you doing? Welcome back to the channel. Today, I wanted to talk about a few things different other than just talking about the portfolio. Um, you know, being an investor is, I don't know, for it's very. I try to find the right word to put. It's very rewarding when you can take something, which in this case is money, and put that money into something by doing just a little bit of research or having the right tools to help you get to where you get and then grow that over the years is very rewarding. And for a long time, I would pay somebody to do this, but now that I'm doing it myself, I wanted to share a couple of things, right? So you see here what it says under age 50, right? If you're under age 50, you can invest up to $7,000 a year, and 50 and above, you can invest $8,000 a year. Now, this investment goes into a Roth. Now, you can either put it into a Roth or a traditional IRA. I wouldn't put that into a traditional IRA, especially if you're making over a certain amount of money. Yes, then you can do that. But if you're not making over $250,000 a year, I will put that money into a Roth. Reason being, if you invest into a Roth, anything you put into that Roth, you can take out, right? You don't have to wait till 59 and a half. But anything gain on that money you put in, that amount you cannot take out. Okay, so just to be clear. Now, the reason I say invest in the Roth, because in the Roth, that money is tax free. The gains is tax free. When you buy and sell in the Roth, is tax free. So, that's the best retirement vehicle outside of a 401k. I think this is better than a 401k because you get to choose what to invest in. Now, before I go too deep into this, you guys know I'm not an advisor. I'm a guy on YouTube that make financial videos based on my life and what I'm doing with my investments, trying to help people like myself to grow their worth and their financial well-being. Okay. With that being said, we're going to go back into this. So the reason I started out with this was to kind of get you guys to know what I'm trying to do, right? So you need, I'll say, three accounts. You need your 401k. Now, the 401k is very important to have 401k with your job. But if you have a 401k, if you don't match it, it's a waste of money. So if your job is matching you 5%, you put up to 5%. Anything else, you can save that money. You can put one lump sum into your Roth, and you can invest that over time. Or when you put it in, you invest it until you max out at that $7,000 a year. Now, in some cases, it's good to invest your money into different things because in some cases that cut down your tax burden, right? Some people are like, well, I need money. I need my money. So, of course, the more you make, the more taxes you pay. So sometimes if you make a set amount of money, you want to cut down your tax burden. You invest this. I think in some cases over 20 some $1,000s a year, you can invest into different tax shelter that would cut down your actual income. I'm not going to get too much into that, but just something for you guys to think about. Now, on the other hand, on the channel, we got asked a question today. And the question basically was, how much can I invest to make $2,000 a month? Um, I answered the question the best way I could. But if we go to Market Beat, right, they have a dividend calculator. This when you log into this, sign into this, kind of give you whatever, right? So I did put some information in here. I just started at 5% yield. I'm gonna go back and start off. This is starting principal. So this means how much money you have to invest, right? Starting principal. So let's say we started with $500 to invest. It can be in our regular dividend account, our regular brokerage account, or this can be in our Roth, right? We can say, okay, I'm gonna put $250 in one account, $250 in the other account. Then on annual contribution, that means how much money we're gonna put in there every year. So let's say you say, you know what, I gotta put $7,000 a year. This is our Roth. Right? So, well, you can do 7,000 because you already put 500, so you can only do 6,500. All right. We're going to start with initial yield, initial dividend yield, annually 5%. Now, sometimes the company increase their yield every year. That can go up. Taxes, we get as low as 15%. All right. And then these other numbers, I mean, this is just expected dividend increase 3%. That's here, not here, there. So we're going to do this for about 20 years. This is a 20-year investment. Okay, so let's say you start at 40. You want to retire by 65, 66, whatever years old. You say, you know what, I'm going to do 20 years. And how much money, if I invest this every year, this is automatically going to reinvest. We got a drip, right? And this is annually, right? So we're going to hit the calculate button. Now, all this number is going to change, right? So we're going to hit calculate. It's going to calculate for us, right? So over the years, you're investing, 7,000. We started off with this much, with 7,000 in that year, right? You started with 500, but overall that year is 7,000, right? And let's go back down here. So in the end, $7,000 a year, you got an average rate of return, annual return of 3.81%. The total return overall, right? You got a 111.41%. Now your any amount in that 20 years time is $275,000, almost $276,000. Then annual income, right? Annual income is $13,000 a year. 13,000, almost $14,000 a year. Now, the total amount of dividend payment over the 20-year period is $100,000, right? And the yield on cost is what you pay fees or whatever else is 10%. So we'll go back down. They have different numbers here, right? I'm not going to go through that. I'm trying to make this short and sweet. So the first year, look at the first 4 years. The first year you started off with your 5, right? You did your contribution, right? And this is what you get that accumulation that first year. Second year, the 7,000, right? It's already there. So your principal now is at 7,000. And you add another, 7,000. So you got first year you get $25. It's probably gonna be more depending on how you do it. Second year, 300. Third year, 700. So every year that money increased because we're starting with a very minimum amount, and we're gonna put in $7,000 a year. So over that time period, 20 years, it comes down over here. Okay, so this is what you are in 20 years. Now you can go and pull this calculator up. I'm gonna put this with when I upload a video, I'm gonna put that in there so you guys can pull that calculator and do it. Right? This is free. You can pay or you can just sign up and stuff. As you can see, I haven't even signed up. We're just using the free one. Okay, so just some basic information. Now we'll go back to the portfolio, and we got some updates today. I didn't buy nothing today. I think I tried to buy some stuff this morning, but I probably bought during the extended hours early this morning. I had to take my daughter back to the university this morning. She finally went into her room and got all that stuff taken care of. So I was like, I had to do this early this morning. I had some key meetings at work, so I had to make time. From yesterday and today, the annual income went up a few dollars, about $300-400. So we up now at 59,000. All right. So I think I got some income and dividend. Let me hit this button. And you guys can see I'm almost almost at $4,000 a month. So this right here is still is above the 4,000 mark, but for the next few months until December, I have to do some more buying and selling to get that to 5,000. And these are all the positions I have, right? So this all my positions put together is 140 something of them. It's a lot of them. Some of them pay 3%, some of them pay 5%. I have I have a few of them that pay, below 20%, and then a few of them that pay a couple handful, maybe less than five, that pay more than 50%. Those are the higher yield investments, right? So I show this to you guys only as the motivation, right? To motivate you guys on what is possible. When I started this posting every day, my income was about $1,000 something a month, right? And I was under 32,000 a year. The thing is moving very slow. I was under 32,000 a year. I was way under that, right? I think I was under 20 something thousand a year. I can't really remember now. But now, within a week, when I added margin to my account, I bought positions on both my portfolio that increased the dividend to this mark. So if you look at all my chart swap, I'm still down. The portfolio before the market went down, I was down about 4,000. And then when everything added up, I was down by 9,000. Now I'm down about 2,500 because I've been daily cost averaging DCA. If you hear DCA, that just means daily cost average. Basically, what it means is if you buy something at $10 and it dropped down to $6, you don't go ahead and sell it. Every day you just buy, you buy and buy. So that drop your cost from $10, hopefully to get it back to the cost where it is now, and then you hope it go back up, or you sell it so you don't lose any money, and you buy another position that's going to bring either more income or a more secure position. Okay, so daily cost averaging is what you daily cost buy into the stock daily to bring down your cost. Okay, so I just want to get that out. So, and this is my chart swap, right? I think on chart swap I have about 40,000 in margins, and I think I use probably about 19,000 in chart swap. But chart swap had higher yield and dividend than my Fidelity. And under the Fidelity, I had 106,000. I think as of today, it's about 107. And I have margins. I think I spent about the margins like 80,000, but I only spent so far about 25. It's under 30, right? So I have $80,000 in margin in buying power, and I only use about 20, close to $30,000 of that money, right? Of course, I don't want to get too crazy, and then you get margin calls, even though I already put money aside for that just in case that happened. But I don't want to be all crazy and doing stuff. So you have to buy when it's needed, and then leave some funds. So if the market take another drop, I'll go back in and buy some more, right? So I'm just showing you guys this. That's where we are today, right? Then if I go into my Fidelity, as you guys can see, where is this thing at? Let me see if I can move this out of the way. I put it here before I move back. So today we went up by 1%, right? So we went up by 1%. We made about $1,000 in Fidelity, right? And okay, so you can see right here, my margins available, my margin buying power, right, is 82,000, right? What I can withdraw cash margins is 40,000. So if I needed to buy a car right now, I can take cash out of this account. I'll go into the bank and get credit and go buy a 10,000, 20,000, 30, 40,000 car on margins. And my position will continue to pay that money back. It doesn't affect my credit, right? But it's right there. The money is there because of what I have invested. So you have to use it wisely. Okay, I'm not telling you to go get margin. Remember, this is just me. I'm not telling you to do it, but this is just me. So if I go back to chart swap, as I was saying before, in chart swap, this is how much I'm down now. I'm down 2%, 2.5%, right? And I got this right here. I've been bringing it down. This was like $3 and something. Now it's 261. Um, I'm thinking tomorrow I will sell half of this and then buy back again, to see how much I can drop that, depending on how much it go up. Because when I'm buying, I really don't look at the price. Since it's like 30 cents difference, even if it's 1 or 2 cents more, I'll buy it. Um, just to get to my what I need to be. As you can see, I mean, I'm positive there, right? Here's the income is a good position. I got a 5% dividend right here. You can see the dividend. They got the dividend right here, yield. So the lowest on here is tax. Now I got this position as a trial position, but I mean it's making me money, so I'm not losing anything. I got one, one, one share, a little bit over one share, and it pays me dividend and rebuys. After I took out the reinvest because I wanted to do it myself because I want to buy certain things. Then I have Tesla, and what was the other one? Tesla. There was another one that was kind of way down, and I got this USOI right here. This is kind of down. It's paid 19%, right? So you can see what I got invested. Because at some point, what I do is I try to buy stuff to keep them balanced. Um, I say balance. I try to keep the amount the same. I try to spend the same amount of money in all of them. So initial goal was to get them all to 1,000. Now I got these two USA. It's like 10%. It's pretty good. So I'm gonna add more money into Misty. Down here, I tried to buy about 300, but it didn't get to my price. It couldn't. I was trying to buy lower than the 23, 26. I couldn't get that price. So eventually, I kind of was like, you know what, the hell with it. Um, I just I just let it go. I was like, I ain't gonna waste my time. I'm gonna let it go. You know. So that's what I did. All right, come on, this thing is moving kind of slow. Let me get to the channel here and see what we got. It's moving slow. So we still on the channel. We still have about 47 subscribers, and we didn't get no new subscribers today. But some days you get them, some days you don't. I'm just happy with the way things are going. With you guys' support, we're getting good questions coming in every day from one or two people. It's not a big channel. I mean, so hoping people, you guys feel free to ask questions. It will help me be able to create new videos other than just showing you guys how much income I'm making every day on the channel. Right? I don't want to just come and say, oh, today I make another dollar, I make $2. I want to be able to give back, as you guys from the support you guys are giving. So remember that I'm not a professional. I'm just a guy on YouTube that makes videos on my life, on how I invest in the stock market. Okay, so do your due diligence before you do anything that you see me doing. Okay, do your due diligence, and I will try to keep putting in different resources that I use to pick what I buy. Okay, and like I say, I don't know how to read it. The graph and how all that stuff going up and down. That's not me. I look at numbers and how the company doing, what the projection are. I look at those things and and make the decision. Hey, do I want to do this or not? I mean, everything is a risk, right? You can lose money, you can make money. So, but once you know that it's a possibility you can lose money, you do less risky stuff, right? So half of my portfolio, well, my $100-some thousand that I have in the account, and the other 80-some thousand were all mostly invested in staple funds, right? Funds that under 20% yield, that I know year in, year out I've been investing in for over the last 4 years. That have been bringing me money. Now I went into the yield max and Defiance and other funds to bring me more income so I can buy more of those to speed up my retirement. So I've been doing this for 4 years, almost 5 years. So I have some practice under my belt. So I say, oh well, if I can do it, anybody can do it. But I just want you guys to be careful. Don't just go willy nilly. Okay, I'm going to spend $20,000 a day because Edwin doing it. Yeah, there's a chance that you might make money. But when the market starts to go, then you're going to panic and say, oh, the market's going down. I'm losing money. And then you sell. Then you lose money, really lose money. Because you really don't lose anything in the market until you sell. If you don't sell, you don't lose anything. So that's one thing I want you guys to remember, right? If you don't sell, you don't lose anything. Until you sell, you lose. Now, like I said, and if you do sell, I mean, if you're making a lot of money, that can help bring down your tax burden. Okay, but that's not the goal to be like, okay, I'm losing money. I'm going to sell now so I can bring down my tax burden. That shouldn't be your goal. The goal is to make money so you can retire early. Now, I started this 4 years ago. I spent a lot of years investing in real estate. I started it 4 years ago, almost 5 years now, and I wish I started it sooner. If I started this in my 30s, by now I'll be, have buku money. I might still be doing it. I will be doing it still because it's something you can do from anywhere. You don't have to be in the U.S. You can be anywhere and doing this and making enough money to live a good, peaceful life, right? It's quality, right? Life quality. So thank you guys for watching. Subscribe to the channel, like, share the content, and make sure to leave your comments. And I appreciate that. And thanks again for watching. I want you guys to have a great day. Enjoy the rest of your evening. Drink a beer for me.